Hello, my name is Mike Florin, and I'm the owner of Low Cost Mortgage. Today is your weekly update for May 10th, 2024. Right, so end of last week, rates came down quite a bit. It was nice to see, but we didn't know if it was going to be bounce or not. Data showed it probably wasn't going to be, and this week, what do we have? Stability. If you look right here, I've got this display over my left shoulder, your right, and I usually run the 6-month or a 1-year, 10-year treasury just so you can look at something through the video. And I'm going to pop it up on the screen now. And look at that stability. Rates were low. They went up for 3 weeks and they were kind of bouncing in this range. And then they came down last Wednesday, Thursday, Friday. And then they started staying in a different range. Well, this whole week's been up a little bit, down a little bit, but it's all relatively stable in relation to all the other days. Now what that means is a lot of investors, once a big movement happens, so rates come down quite a bit last Wednesday, Thursday, Friday, some of the investors that price out better, typically day by day, are going to hold off and wait to reprice until they know where the stability lines are. And once the stability started to bracket Monday and Tuesday, rates continued to come down for a lot of different investors. In fact, I was able to lock a deal, VA, FHA, I was able to lock a deal in the fives, high fives at par, no origination, no discount. He's a disabled veteran, and that means his APR was, I think his interest rate was 5.8 and the 5.875, and the APR was 5.89 something. I mean, it was, because you're disabled and it's at par, the APRs are very similar. Just FYI. But anyways, with that being said, if we look at rates right now, conventional is mid sixes-ish. And again, you can go to lcmloans.com/rates. But you've got conventionals mid-ish sixes. You'll see it in the email. With a little bit of money, your mid-ish, depending on scenario. Just kind of depends. Conventional this week is very scenario driven. But government is super low sixes. Par is really low sixes, and then with a little bit of money, you're in the fives. But I want to talk about our pricing tool for a minute, and that's from our pricing tool. In the email, you're getting something more specific, and here's why. The pricing tool itself is going to be about 0.25% higher in rate, roughly day by day, maybe an eighth, maybe a quarter, maybe 3/8. Different depending on, I want to say it's going to be higher on the online search tool than if we actually run it inside, and here's why. I want to make sure we're compliant. I want to make sure we're following the rules, and I want to make sure that somebody doesn't see an interest rate or a deal that they can't get. So even if you have somebody who's high credit and they want to do a VA purchase or an FHA purchase, and they want to be in the fives with no money this week, they could, but they have to meet the criteria of a few of the investors that are really, really cheap. What I do is I have investors that I know are relatively low priced most of the time. Those are the ones you're seeing on this search tool, the one that's right over here, lcmloans.com/rates. But I have some investors that we send loans to that are not on that pricing tool. And the main reason is there's rules attached to them. One of the rules is they don't float down. So I don't want somebody to see a rate that cannot be floated down later. Another good rule is you need to have some time on that contract. So if you ever see on the email where it says LC next to pricing, that's long contract needed, because the cheap investors are flooded with business, and guess what? That means they are slower. In fact, we have some deals that are closing, and sometimes those clear to closes are somewhat last minute-ish if the borrowers are not fast on documents and the scenario is not simple. So in order for us to take your borrowers and give them the better deal, I need to look at it, have a conversation with the borrowers and say, okay, investor A is pretty good price, right? We're beating everybody with investor A, which is good. Well, mostly everybody. I can't say absolutely everybody, but we're beating pretty much everybody with investor A by 0.5% or whatever it ends up being. I think it's averaging like 0.6 or 0.7% for the same cost. And they float down and they do these things. But here's investor B. Now they're a little lower on rate. So investor A is here, investor B is here. But Here's the catch. There is a catch here. You need to get your documents up front. We need a simplistic scenario. You cannot argue at all, and we will not argue at all, conditions, because it really is he who has the money makes the rules. Well, of course, they have a little bit of additional rules attached to that lower money. So with that being said, in order to get a really, really good deal, a better deal than you're seeing in the emails and a better deal than you're seeing on the search tool, it's really simple. Give us a call. We can run through the scenario real quick, usually about 10 minutes or so, maybe 5, and we'll know if we can use one of those cheaper investors or not. On the real estate side, if we are using one of those cheaper investors, you're going to hear from me, the processors, whoever your loan officer is. You're going to hear from us, and we're going to say, hey, this is the cheaper option. This one's going to come in a little late, or this one's going to be a little bit slow, or this one, we need to make sure we're getting everything to them really fast. And when we're using one of those investors that are slower, we remind everybody all the time, all right? All the time. It's kind of required. I don't know why people don't like to communicate, but some people don't. All right, well, that's about that. Good weekend for rates. It doesn't look like anything good or anything, not good, but it doesn't look like any data potentially could come out next week to hurt rates. But 5 months ago or 3 months ago, rates were not supposed to go up. The data was pretty good, and rates just went up for 2 weeks straight. So you can't say no data is a good predictor of stability. All I can tell you is what's happened this week, which is stability. All right. Well, anyways, my name is Mike Florin. I'll talk to you later. Have a great day. See you later.